Mr. Chairman, members of the committee, thank you for allowing me to speak in favor of HB 1674. My name is Daniel Diaz. I'm the Executive Director of Citizens for Sound Money. I'm also the CEO and co-founder of a crypto mining and blockchain consulting company called Mining Life. Prior to my current career, I was a former insurance agent for the Knights of Columbus and a stockbroker with my Series 7 license, where I learned a lot about how the global economic system and the fiat monetary system works. I'm also a contributing analyst to investingdaily.com as their crypto and sound money analyst. My entire professional career in finance has been focused on helping people protect their wealth and increasing their financial literacy. And that is why I'm here today. HB 1674 will protect Granite Staters from the devastating effects of inflation. If you turn to the first page, I asked the question, what is inflation? The simplest definition of inflation is the expansion of the currency supply. So if you look on the chart, look down in January of roughly 2020 through November of 2023, our national debt increased by $10,777 billion. From January 20, the total debt was $23 trillion, and by November of last year, it was $34 trillion. That is an increase of the monetary supply by 46.4%. As new currency is purchased, it dilutes the current purchasing power of all currency in circulation. So we've lost around 46, almost 50% of our purchasing power in just under 4 years. On page number 2, and you'll see in the chart that in 1971, Nixon took us off the gold standard, effectively making the dollar a fiat currency, it's unbacked, just by the full faith and credit of the United States. Throughout all of recorded human history, there has never been a single, and there's over 6,000 recorded references to fiat currencies unbacked by any type of precious metal or base metal. Not one single fiat currency has survived in all human history. If you look at the chart, you'll see that most currencies were flat because they were pegged to the dollar. The moment that the currencies were unpegged in 1971, most currencies dropped in value by 90% or more. If you go to page 3, the next 2 charts, is it 2? 3 charts. The next 3 charts will show the difference between assets compared to the dollar versus gold. In this first chart, we'll see that the gold has protected against inflation. You'll see at the beginning of the chart, it's 1971, where gold and the dollar were combined. And then from 1971 to today, we have a 667% inflation rate in the dollar. That's a loss of purchasing power. If you look at gold, gold has actually increased in value compared to the dollar by 84, almost 85%. Gold has protected purchasing power for millennia. The next chart on page number 4, we're comparing gold to oil. You'll see at the beginning in 1971, when we were pegged to gold, oil was in the dollar was pretty much the same price. But as we depegged, you'll see that you can buy more oil with gold throughout the last 53 years versus the dollar. Oil has gone up 600%, just like the inflation of the dollar, while gold has actually increased in value by 50%. And finally, the last chart, real estate. So we go back to 1971, where the dollar was pegged, and when it was depegged, you'll see that the value of homes have gone up 965% compared to the dollar, while this gold has maintained its value. In fact, in 1979, the average price of a house was $73,000, which was 268 ounces of gold. Today, the average price of a house is $513,000. Guess how many ounces of gold? 268. Because gold maintains its purchasing power. So I share all this information to you to explain the value of having a gold-backed currency. And Citizens for Sound Money, my organization, along with Representative Amer, are the ones to help write this piece of legislation. And I know some of you have some detailed questions. If you have any questions, I'm more than happy to answer them since we were the ones, our legislative committee wrote this bill, and it's currently in 20 different states in different renditions. Thank you.
Okay, Representative Gibbs.
Thank you, Mr. Chairman. I'm sorry I had to step out to the restroom, so I didn't hear all of your testimony. But my question is, doesn't the state of New Hampshire have enough work to do without setting up a depository for gold and silver?
Thank you for that question, Representative Gibbs. I think that's a great question, and we have some experts behind me, and also I have a written testimony by one of the companies that would be actually bidding to run the depository and create the electronic currency. Load Labs can't be here today, but we have another company, the president of Kinesis, which is another gold and company that will also manage the depository. There won't be any additional work added. Significant work added to the state because these private companies will manage with their contracts with Brinks or other private vaulting companies. And also they've already created and they're already working across the world using cryptocurrency. In fact, I have a debit card in my pocket I could show you that's backed by gold, and I can spend it anywhere right now, buy you a cup of coffee, buy dinner with gold, and the merchant won't even know because at the moment of swiping that card, the gold is sold at market prices, which I think answers a few of your concerns, and the merchant won't even know I paid with gold because they'll receive dollars.
Follow-up question?
Well, I was good. You hit it right on the nail. What's in this for the state of New Hampshire to spend millions of dollars to do something that private industry can do, is already doing? Why do we want to muck around and compete with you?
That's a beautiful question, Representative Hunt, because Article 1, Section 10, Clause 1 of the U.S. Constitution gives the states the authority to make gold and silver legal tender in the state. Right now, there's only 4 states in the union.
But why would we want to do that if it's
to protect
going to
granite staters?
If it's going to cost us thousands, millions, and millions of dollars to have an infrastructure for it?
Well,
what's in it for New Hampshire?
Load and that's a great question. Load and Kinesis will actually provide the technology and the infrastructure for free. And I'll let the president of Kinesis, and this statement right here explains it. The only thing they request, since they'll be putting up the money for the infrastructure, is potentially donating Load is asking for $250,000 in gold and silver to kickstart the depository amounts of gold and silver. But all the technology will be provided, and the way and after the companies recuperate their fees for creating the infrastructure, then there's a split revenue model where the state will receive revenue from every transaction using the digital currency.
Okay, Representative Gibbs, you may have your question.
Thank you. Follow-up question. You mentioned a debit card based on gold. Who administers that debit card system, and why do you trust them?
Well, right now, the debit card I have is partnered with a bank in the United States that's FDIC insured. And I know Kinesis and Load have debit cards in other countries, and they will be coming, debit card will be coming to this country soon. I'm sure Eric Maine, who's the president of Kinesis, can give you a little bit more information about that. But it's partnered with the banks. And the MasterCard, I think, is a card I have in my pocket. I think Visa is also an option.
But they have fees.
Yes, and it's about 22 to 45 basis points for using the system. And for instance, I don't want to take too much time. The president, Eric, will be able to discuss how their fee system for merchants work. But by having the merchant system, merchants will save between 200 and 400% on credit card charges if they accept the digital currency, because it's only 22 to 45 basis points versus 2 to 4%, which is 200 and 400%, 400 basis points. So there's a savings to merchants if they decide to accept gold and silver currency.
Okay. I'm missing something here, but that's all right. All right. Any other questions? See, thank you very much.
Thank you.
Well, good afternoon, Mr. Chairman and committee. Yeah, so Eric Maine, I'm the president of two global companies. One is Allocated Bullion Exchange, which is a online institutional exchange for the trading of spot physical gold and silver, based out of Australia. And the president of Kinesis, which is a global financial technologies company that has built an end-to-end monetary system based on digital gold and silver currencies on the blockchain. We're very vertically integrated, so there'll be a lot of questions that I can answer. We own a gold refinery. We have built and operate depositories around the world. We have vaulting accounts with the major third-party vaulting providers in 13 different countries. And so, I'm here to answer questions, what we've done. One of the things, we've done our own organically, have grown our own customer base, et cetera, but maybe more relevant here is we've done public-private partnerships with national governments to implement, the kind of thing you're looking to do here. So the most advanced one that is operational is with the government of Indonesia, where we have integrated with the local banks there, all payment systems, et cetera. So it's our digital gold and silver currencies sit side by side, the Indonesian rupiah, through debit cards. As Daniel was explaining, there's an option within these debit cards where people can use the existing fiat or the digital gold and silver. What we do is fee-based, and what we do with our government partners, it is a fee-sharing model. We're happy to take on the infrastructure cost of creating a platform for the government that's basically a white label of our existing platform, together with the vaulting and depository infrastructure. And what we ask for in return is a certain amount of the funds that get transacted through the system come to us first, and then after we recoup our costs for doing it, then we share with the state. It's a model that is very welcomed in these countries that we're doing it with. And it's actually has the potential to be quite a robust revenue stream for the states. I'm happy to answer any questions.
Okay, we do have several questions. Representative Spear.
I downloaded your book.
Okay, I haven't seen that one, but okay. Yes, that's
It says Kinesis all over it.
Kinesis monetary system. Yes, ma'am.
One of the things it points out in here is that the model that you have works well in countries where banks are not that prevalent and people can't get to banks that easily. And so it's an alternative way of distributing, I guess, funding without the infrastructure that we have in the United States, where we have 2 banks on every corner. So that part of it is we can't
So what's your
create. We
question?
can't. What was it?
What's your question?
But I guess the question is, in this model, you talk about making money. It's not easy to describe if you have not read this. If you have, the way it talks about this, if you don't have a lot of money to put into it, which a lot of people don't, then the way you recoup money on it is by referring other people. Kind of like, a little bit like that. Is that what you're saying? And what do you get out of this? What does the state get out of us being a front for this kind of an operation? Why do you even need us?
Well, because of the trust of the state. So you have citizens that trust the state, and when you do a public-private partnership, it means just that. You are publicly facing with a private company that has the experience and the ability to do what you're looking for. But at the end of the day, the state is the state, and people trust your state. And that's true in these countries that are doing it. I would say On the fees, look, it's a very small amount of fee that happens every time somebody sends or spends on the debit card or buys at a merchant. It's 0.22%. That's 22 basis points. And for us, it's the amount of adoption. So you have adoption by a large amount of the citizens doing it. It creates a lot of money. There's a lot of money that flows through. I don't know, what's the GDP of New Hampshire, 90 billion, et cetera, whatever. But if you take a small percentage of that using this system, you can generate a lot of revenue, and it's ongoing. And what is it for the individuals? Well, the model that we set out is a fee-sharing model. So it's not only the state that participates in that revenue share, it is the citizens themselves. So what we do is all those transactions that happen within that ecosystem is collected into a master fee pool. And every month we give back, depending on how you utilize that, to various people within the ecosystem. So some are for people that have just spent it. Of course, up the top line is the split with the state. So the state gets their piece. Let's say it's 50-50. Then out of the other 50%, there would be a certain percentage that goes to people that just are holding the token as a savings. And then there's a different percentage that goes to those that are actively spending it. It's what we call velocity. We're trying to create velocity and moving money just like you would US dollars.
One more question. In the pamphlet, it talks about that the money that's made is in fees goes to the Cayman Islands, and the books are kept by you in the Cayman Islands, and we get whatever you guys tell us we're supposed to get. Is that how you see this working here?
No, that's not how it works, ma'am. So Kinesis, we have 27 different entities around the world, and because we're facing different regulatory regimes, the holding company is a Cayman Islands company. But what we would look to do here, as we have done elsewhere, we have a local entity that's locally regulated, and so it wouldn't be anything to do with the Cayman Islands, for example. So in Indonesia or in Panama, where we're doing it, we have a local Kinesis entity that is, and I have to say, on the regulatory front, because that's just been a piece that's been brought up by multiple people. So we welcome being part whatever the regulatory infrastructure that makes sense. So in Indonesia, it's with the commodity regulator and the banking regulator. In Panama, it's the central bank and the bank supervisory regulator. So all those components are put together, and we're just providing the infrastructure. It's up to the state to run it. We can support it and provide the people, et cetera. But on the depository piece, what we've done with other partners is, no gold can come in, no gold can come out. Nothing can happen without a multi-signature. That would mean a representative of the state and the depository operations sign off on it electronically before anything happens. So the state has, as with our other partners, a lot of oversight.
I have a real question.
Representative Petusekis next.
Thank you, Mr. Chair. Thank you for testifying, Mr. Maine. My question, what is the value of storing money in gold or silver bullion before spending it as a debit card?
Yeah, so this is the classic thing called Gresham's law, that bad money drives out good. So if you think of it, of having a piece of your silver coin in your hand versus a paper dollar, which one are you going to buy coffee with? I'm going to use the paper dollar, right? I'm going to keep the silver. I'm going to keep the gold. And this means bad money drives out good. That's Gresham's law. The way you defeat that in our model is through this fee-sharing system where people are getting a yield on just holding the gold. They're getting a yield on getting cash back by spending it. And we share these fees with them. And so it becomes an income generating, and there's income to be generated at every level: the merchant level, the individual level, the corporate level, and of course the state and, our level.
But that's as long as gold keeps going up in value. I mean, theoretically, the rule of economics is that the reason why gold keeps going up in value because it's a limited resource. There's only so much gold out there. So therefore, you're betting on the fact that there's only going to be a handful of gold out there, and there's no, like someone was talking about a new alchemy. We're not going to have somebody can turn lead into gold and suddenly change everything. But the whole thing you're betting on is the fact that gold will continue to go up because it's a limited resource.
Well,
haves and
Mr. Chairman, I
have-nots.
would say not necessarily that it continues to go up, but that over time it is a stabilizing factor basis against the U.S. dollar.
Well, I don't know if it's stabilizing because it keeps going up in value. And
Well, that's
keep
a
it keeps
perk.
taking more dollars.
So that's
to
a perk.
own it.
Look, it's a perk that it goes up, but it doesn't have to go up for this model to work. It will work over the long term if
Well-
gold is stable compared to the value of the dollar.
You certainly don't want it to go down.
Don't want to go
Because
down,
there are all
but
these people who are all depending upon that revenue of that growth.
yes, but as you just pointed out, it is a limited resource, and so
So
the
it can only go up,
inclination
right?
it can stable or go up
Okay.
over the long term.
All right, Representative Herbert.
My question's sort of related to the chairman's. From your perspective, what happens based on fluctuations in mining? In other words, is the gold production pretty steady over time? But I know in the 1890s, there was a huge fight because in agriculture, you borrow and then you pay back, and if the gold for whatever reason comes out, goes up much higher, it causes severe problems. So I'm just wondering, how do you
Well,
manage this because gold is going to be high and low.
it's going to be higher and low, but it is relatively stable over long periods of time. So mine production is a thing that is, yes, there is new mine production comes on board all the time, and you have some big blips where somebody, has something that's a big resource, but it costs a lot of money to bring gold out of the ground. As you deplete those that are closer to the surface, you have to dig down deeper, and it's harder to get, and it's more expensive. So there's a point where mining new gold is not even worth it. Now it's worth it where it is now, but you get down to $800 an ounce or something like that. It's not worth to mine anything anymore. So there's not going to be a whole lot more gold out of the ground. It's going to be a depleting resource over time. There will be some upticks in some production, but over a long period, the gold production will go down, which means
One other question. It's related.
Because we're getting
My
hungry.
question to you is, where does the rubber meet the road in your business? I understand, I think, how you make money, but where is the fluctuations in the currencies you have to deal with? I mean, how is that moderated? How do you keep up with currency fluctuations? Is it something you have to pay a lot of attention to, or
Okay,
I think that's
it's the forex? I don't. How is this all worked out? Is this all forex?
well, yes. So normal way that any company would manage their business if they're doing business in multi-currencies.
great. Thank you.
Oh no, the currency makes the exchange.
All right. Thank you very much for your testimony. All right.
My name is Jason Dreyzehner. I'm a software engineer in Portsmouth, and I've been working in the digital currency space since 2013. I led the design of the world's first multi-device Bitcoin wallet, and I invented a number of the technical upgrades to the smart contracting system of one of the world's largest cryptocurrency networks. I'm deeply familiar with this space and with the technical and operational requirements of the sort of digital currency proposed in this bill. I'm also here on a personal basis. I don't represent any companies, and I have no products to sell. I am excited about this bill because I believe it would create an opportunities for companies to build digital currency products with a reliable American asset. I think it could attract significant investment and create thousands of well-paying jobs in New Hampshire. Here's why tokenized real-world assets like this matter. Tokens enable open payment networks with lower fees and faster settlement than proprietary closed networks. Lending systems that don't suffer from the kind of cascading failures that we saw in the 2008 financial crisis. Free and open crowdfunding systems that allow nonprofits to reduce their overhead and give donors more visibility into the flow of funds. And ultra-transparent asset exchanges where large investors don't get cost or timing advantages versus smaller investors, and more. American companies are building the plumbing, the tools, and services to make these innovations happen. But here's the problem. Due to federal regulatory uncertainty, American assets are very rarely flowing through those pipes. This bill would solve that problem by giving us a trusted American asset to power these applications with American companies. So with that in mind, let's talk about how the depository is funded. The tokens can automatically assess and accrue fees over time upon redemption or when transferred between networks. It's possible for the depository to generate revenue both from those direct fees and from activities like market making and liquidity provision in decentralized exchange protocols. And I'm happy to talk more about those technical details, but for now I'll just note that smart contracts, the algorithms that run on these digital currency networks, can really reduce the overhead of collecting that revenue. There are both US-based and offshore entities offering depository services like this that collect millions in revenue annually. And with the added stability and legal certainty of New Hampshire's seal, we can expect that a New Hampshire issued token would expand that market and generate significant revenue for the state. To summarize, this is a profitable business, and I expect the depository to fully fund itself. And I also want to note that initial startup costs could be supplemented or funded by the state selling a note, or possibly crowdfunded. This is something that can maintain itself over the long term, so it's the initial startup costs that are in question. Thank you very much for your time, and I'm open to answering any questions. Yes.
I have a question about, have you communicated with the New Hampshire treasurer and the DOJ?
No, I
There's no
just wanted
conversation?
to mention that in this comment because we had spoken with it earlier. I do believe that this is the kind of operation that could be funded by selling a note to investors who would fully bear the risk of whether or not the operation ultimately was successful, rather than it touching taxpayer funds. That's why I wanted to mention it in this
Sell a
testimony.
bond, but that's uncollateralized.
Um,
That loses your whole benefit of the state putting its name to it. I don't see how that would work.
I'm sorry. I wanted to bring that into the testimony, but no, it would be a New Hampshire run depository and digital currency. I wanted to mention that I think that this can be a completely budget neutral project and could ultimately be a significant source of revenue for the state. From an industry perspective, it is already a profitable business. The issue is that due to regulatory uncertainty and federal regulatory uncertainty, American businesses are not able to meaningfully compete in this area. European and Asian businesses are doing significantly better. They're able to work within those regulatory frameworks much more clearly, to have European and Asian assets working in these digital systems. So we can have these innovations like open payment networks with very low fees and exchanges where larger investors don't get advantages over smaller investors, but we're using them with assets that are not American. And it would be, I believe, a huge boon to New Hampshire for New Hampshire assets to be used in that market. I think it would bring thousands of well-paying jobs to the state and attract significant foreign and domestic investment.
Good. Thank you.
Well, Mr. Chair and committee, thank you very much for the opportunity. I come here as a concerned Granite State citizen. Alan Shepard once said that any landing you can walk away from is a good one, and I believe the same thing can be said about the economic and monetary crisis that awaits our nation, which includes the citizens of New Hampshire. Thank you very much for the committee. Until today, I've never testified to any political body, nor have I ever been part of any local, state, or federal politics. But for my children's sake, I have 5 children. The stakes are too great for me to stay silent any longer. My name is Daniel J. Tinkham. I'm a lifelong resident of New Hampshire. I grew up in East Derry, where my love of numismatics, the study of coins and paper money, began at the age of 14. I attended Pinkerton Academy, where I excelled in academics. I was treasurer for the Future Business Leaders of America. I was a member of the Academy of Finance, securing a banking internship at TD Bank at just the age of 16. I attended Southern New Hampshire University and graduated in 2010 from the 3-year honors program in business administration. I also received my master's in business administration with a finance concentration in 2014. In my 5 years at Fidelity Investments in Merrimack, New Hampshire, I was 2-time President's Circle winner. I also spent 7 years at Empower's retirement division, which happens to handle the New Hampshire retirement system. I now work in private equity, raising capital for King Operating, an oil and gas company operator based out of Dallas, Texas. I'm also a major investor in a private company based in Orlando, Florida, that focuses on first player entertainment, specializing in virtual theme parks and virtual entertainment. House Bill 1674 would go a long way towards building a trusted bridge between the digital and physical worlds, in my opinion. The idea of gold and silver circulating as real money has been lost for many generations. Some of you may even remember getting silver in your change. However, the recognition of gold and silver as constitutional money is making a remarkable comeback in recent years. This committee should proceed in passing the Legal Tender Act. The state should find a way to build a bullion depository, in my opinion, or partner up with private companies, which we've already talked about here today, with the know-how to start and operate a facility. Not passing the bill will hurt residents in the long run, as the purchasing power of the U.S. dollar continues its precipitous decline. There are other states who are working on passing similar legislation, and being an early adopter would give New Hampshire significant first-mover advantages against other states who may choose outsourcing to other states or private companies, or who will do nothing at all. Although many bullion depository transactions would be physical deposits and/or withdrawals, they would not have to be settled physically. Billions of transactions are settled already on a daily basis across a broad spectrum of payment options and ledger systems. The state should work with competent partners with experience in establishing depositories and payment systems to ensure that New Hampshire is the gold standard when it comes to establishing the functionality of precious metals and payment systems, pun intended. To provide one such example to this committee, the state of Texas retirement system helped their state establish the Texas Bullion Depository for the benefit of all Texas pensioners and retirees, after realizing they were spending many millions of dollars per year in unnecessary fees to faceless corporations like BlackRock and Vanguard. Those shares were ultimately redeemed for cash, and that cash was used by the Texas State Treasurer to purchase physical gold and silver, ultimately for the benefit of all pensioners. Any costs incurred by New Hampshire with the bullion program should also be compared against the annual cost of its Wall Street money managers, and how much of that savings would be repatriated by moving these proceeds directly to New Hampshire vaults in the form of gold and silver. When it comes to New Hampshire citizens, we prefer options and the free will to choose what is the best for our needs whenever possible. House Bill 1674 provides citizens with choice and would not affect anyone who does not wish to participate. Thank you.
We do have a question, Representative Spear.
The gold bullion deposit, I spoke to someone at a representative at the bullion depository. It cost them $23 million to build it. And the reason they built it was because they thought they had $860 million in gold from the University of Texas and the Texas A&M. In the middle of building it, they sold off that gold because it wasn't liquid enough and the schools needed the money, so they had nothing. As of this summer, they had $140 million in assets. That's all. That's all they've got. They never got what they said they were going to do.
Isn't that great that they already did that, so we can learn from that? And that's why private companies are here today, in my opinion. Was it mishandled or handled improperly? Or I don't know. I don't know the details of the Texas case specifically, other than that they started it. But I think there's probably a lot to learn from that. At the same time, too, I think establishing private-public partnerships. If you go down the highway, you can see common man chains. There's plenty of opportunities that private-public partnerships have worked in the state, particularly with the liquor stores. There's different models, and the fact that we're all here today talking about it is a great start.
We are debating right now for the marijuana is to a private-public partnership, and it's still having a lot of troubles. Okay, thank you very much.